Hey, what's up everyone? Welcome back to the channel. Okay, so in today's video, we got a little bit of a fun topic. We're gonna switch things up a little bit and we're gonna be talking about some spec stocks. Now, as is always the case with literally any video that I make on the channel, I'm not telling you guys to buy or sell anything. This is not a recommendation to do anything. This is just kind of my opinion, but we're doing this for fun because a lot of you have requested that I talk about some spec stocks. So we're gonna run through 5 highly speculative stocks that I love to track and keep an eye on. And hey, maybe I even own a couple of these as well. I'll let you know as we run through the list. But just keep in mind these type of companies, they might have a deteriorating business. They might not be profitable. Maybe it's a new kind of startup company, so maybe they have a lot of future growth potential if they're able to execute, but there's a lot of risk there as well. So I don't really think of these as like investments as much as they are like gambles. It's like going out to the casino. Sure, you might hit it big once in a while, but you also run the risk of losing all your money because, like I said, a lot of these companies have to make some big turnarounds here, and if they're not able to do that, they could always go, bankrupt, unfortunately, or things like that. So there's a lot of risk there. Make sure you do a ton of research before you even think about touching these type of stocks. But again, we're just kind of doing this for fun. I hope you guys enjoy the video, and if you do, make sure you hit the like button. Really helps the channel and it means a lot to me. But in no particular order, let's go ahead and get started here and run through this list. Okay, so kicking things off here with stock number 1 of 5, we're gonna go with a legacy favorite for many people, and that is Ford, ticker symbol F. And what a shame that it's gotten to the point that we literally have to classify Ford as a speculative stock, because back in the day, it was a high yielding dividend stock that many people love to own in their portfolio. Fast forward to today though, and the story has really changed for them. For one, the stock has been destroyed in recent years, crashing by over 50% in the past 5 years alone, and 2020 hasn't been friendly to Ford either, as they are currently down over 25% year to date as well, now trading for as little as just $6 a share. Pretty crazy. And not only have Ford investors had to suffer those losses, but they've also lost the dividend that they were forced to cut in order to survive the current health and economic crisis that continues to linger on. And of course, all of this is due to a deteriorating business that was struggling even before the global health issue even started. Take, for example, their wholesale numbers in North America. Sales have been dropping consistently for years, with 2019 seeing the biggest drop of all. Now, that's not entirely Ford's fault. Global car sales in general dropped last year and are expected to plummet even more so this year, but that's having a direct effect on Ford's financials, as sales dropped by 3% last year and are expected to crash by over 25% this year alone, according to Yahoo Finance. However, there's reason to believe that Ford could in fact turn things around in a few years. For one, like I said before, a lot of their current struggles are actually due to macro weakness, including the large global recession that we're still trying to climb out of. And while I do see ICE vehicle sales continuing to struggle regardless of the economy, Ford is at least finally starting to take the future of electric vehicles seriously. The upcoming Ford Mustang Mach-E is not only electric, but it's also a crossover SUV, which is the largest selling vehicle segment in the entire world, and it also takes advantage of the large Mustang brand popularity. On top of that, Ford's F-150 pickup truck has been the best-selling vehicle in America for more than 3 decades and the best-selling pickup truck for more than 4 decades. So as you might expect, they're launching an electric version to capitalize on that popularity as well, although it doesn't look like that's coming out until at least a couple years. So, this is kind of we're talking about a very multi-year turnaround here if it's successful. And that's really the reason why I haven't been able to buy Ford stock myself. It always feels like the exciting comeback is just too many years away, and meanwhile Tesla, which is already my second largest stock, continues to grow and get bigger and better, and that's why I don't feel like I really need to own Ford as well. Out of the two, I just think Tesla is more exciting. They have the better technology, including autonomous driving, and if I was going to buy an electric vehicle, I'd just personally rather get a Tesla. By the way, I do have the Cybertruck pre-ordered, but having said that, obviously I'm probably biased here, but I can still understand why others want to be betting on Ford, since they have such a tiny valuation with a PE of less than 7 and a PS ratio of less than 0.2. That is very cheap just from a general valuation standpoint. If they're able to execute, a gamble on that price could turn into some big gains in the future, and that's why I enjoy tracking the stock even though I don't own it. Okay, now moving on to spec stock number 2, I'm gonna go with Glue Mobile. This is ticker symbol GLUU, and this is a mobile gaming company, but still a fairly small one as their market cap is less than 2 billion. For context, a major competitor in Zynga is worth over 10 billion, and then giant companies like Electronic Arts and Activision are easily in the tens of billions by comparison. Now, over the years, Glue has performed pretty well, but it's also been a very volatile ride, jumping to over $12, crashing to less than $4, popping back up to over $10, and then falling once again now to the $7 range. So it's definitely been a roller coaster ride, as you would expect from really any kind of spec stock, but just like most of them, Glue also has a lot of potential. According to Newzoo research, the global games market is worth almost $160 billion. And if you look deeper into that data, you'll find that almost half of the entire market is actually coming from just mobile games alone. And not just that, but most of the growth is actually coming from mobile as well, as it's growing at over 13% year over year, while console and PC are at less than 7% each. So you're talking about about double the growth rate for mobile. That's a pretty big deal. Now, this is also a big deal for Glue because their sales are still relatively small, but they consistently grow at least 10% or more every year, with this year in particular expected to be a significant uptick of almost 30%, in large part thanks to a diverse portfolio of games that range from hunting, fighting, and sports to fashion and design. They even have very valuable license agreements with both the WWE and, of course, Disney in their new Sorcerer's Arena game. Meanwhile, the company continues to improve their efficiency and were actually able to post a profit for the first time last year, which should likely continue into the future. Because of that, their PE ratio drops from over 100 trailing all the way down to less than a quarter of that forward. And if the success continues, that valuation could actually still be pretty attractive. Unfortunately, the stock is just too volatile and the business is just too speculative for me to jump in at this time, but it's a stock that I've thought about buying many times, and if it continues to go down, I might just have to jump in at some point, which by the way, it's recently dipped because of their most recent quarterly earnings, despite posting record bookings of close to $200 million, with 5 games generating at least 20 million of that each. Year over year, it was growth of almost 80%. That's a lot of growth. The market didn't seem to like the guidance for the next quarter though, but I think it could actually be an overreaction. We'll have to wait and see. Okay, now moving on to stock number 3, we've got a stock that I actually do own myself, and that is Delta Airlines. Ticker symbol is DAL. And just like Ford, I never thought I'd be here calling Delta a spec stock, but that's just the reality of 2020. As I'm sure all of you know, airline stocks have been destroyed this year thanks to the health crisis dropping travel demand, with this airline ETF still sitting down almost 50% after falling off a cliff. And the same exact thing really happened to Delta, that was normally a pretty stable and also a high yielding dividend stock, but is currently still down over 50% this year alone, with of course no dividend in sight. Now, full disclosure, my average cost is in the low 20s, so I am up a bit on my position, but it's only about 1% of my portfolio, so it's very unmeaningful, in my portfolio. It's a very tiny kind of spec little position. Anyway, Delta's business has of course deteriorated, with revenue expected to crash by a mind-blowing amount of over 60% this year alone. Now, that is expected to bounce back by 70% the year after, but even at those levels, it would still be significantly lower than what they've seen many years ago. And so the question is really, do you believe that the world will one day return to normal? And for me, well, I happen to think it will. V-Shots will likely be released by the end of this year, and regardless of what your feelings are on V-Shots, once those are made widely available, there really shouldn't be any reason left for politicians to enforce lockdowns and travel bans. At that point, it should be left up to people whether they want to take any risks or not, because if V-Shots are available, it's really your choice what risk you want to take, with or without it. Now, I do often see an argument being made right now that companies and even people are getting too used to staying home or even working from home and may therefore not want to travel as much in the future. But I call major BS on most of that. I think people are reaching their breaking points with staying home, and I think the end result will be a big surge in travel demand once everything goes back to normal and people rush to go out and explore again and visit family and friends and go on vacation and everything else. So I do think that many of these companies will recover, including Delta, given how large they are and how much market share they command, with the second most market share in the US alone. However, what I hate about travel stocks now is that I've realized how incredibly vulnerable they are to lockdowns and travel bans, and because of that, I don't really want to invest in them long term anymore. I will, however, continue to hold my Delta position because I got it so cheap and it's a very small position, so I can just kind of take the risk and just wait and see how high they recover over the next few years. But I probably won't be adding to it because it's just too stressful to hold, and I'd rather put my time and energy into researching more reliable long-term stocks. Okay, now moving on to spec stock number 4, I wanted to throw in a sort of wild card, a high risk, high reward kind of spec stock that most of you probably have not heard of, and one that I am still trying to research more myself. And for that, I decided to go with Cloudflare. Ticker symbol is NET, which is a pretty exciting spec stock that, again, I love to track this one. And this is a cloud computing company that also focuses very heavily on cybersecurity and protects your websites and applications from cyber threats. Now, they already work on over 27 million websites or applications worldwide, ensuring that they don't succumb to cyber attacks. And that includes big retailers like Walmart and even government agencies like the FBI. Now, they're also very well diversified, with over 50% of their revenue coming from outside the US, and offer services in over 200 cities across more than 100 countries around the world. And by offering an all-in-one experience that combines infrastructure, security, performance, and ease of use, they're able to offer a multitude of solutions across cloud, hybrid cloud, serverless, and a multitude of other applications for competitive prices or even free tiers that they later try to convert to premium subscriptions, all in hopes of disrupting a high growth addressable market that is already worth over $30 billion. For context, their revenue last year was less than 300 million, so that's a very big market opportunity for them. But because of the lockdown orders forcing remote work and the rise of 5G and the Internet of Things only causing a greater increase of new online infrastructure and websites and web applications that will obviously need more security in the future, Net is currently experiencing explosive growth. Last year alone, their revenue grew by almost 50%. Unfortunately, like many newly IPO'd spec stocks, which by the way, Net IPO'd I think less than like a year ago, Net is not currently profitable and lost even more money last year. But what I do find interesting though is that they actually have really good profit margins. In fact, last year, their gross profit margin was almost 80%. The only problem is that they spend a lot of it on marketing and research and development, but if they ever get to a place where they don't need to advertise themselves as much and try to expand everywhere, and if revenues continue to soar like they have been, then we could be talking about a company that becomes very profitable very quickly. The question is whether they can execute, because if they can't, then they'll have to keep burning all their profits to acquire more customers as as others leave, and that can turn into a disaster. And of course, there's always the possibility of that when you have giant sharks like Amazon and Microsoft lurking in the water. But bulls would argue that Net can not only steal market share by offering cheaper prices, but even when they can't steal those customers, they can still offer complementary services on top of what they're using, like what they do, for example, already with Amazon Web Services. Still, the stock has already run up by way too much for me, as since IPOing last September in the low teens, the stock has skyrocketed to as much as $40 a share and are already up by over 130% this year alone, leaving them with a sky-high valuation of a trailing PS ratio of over 40 without yet being profitable. Again, that valuation can come down very quickly, especially when profits start rolling in, but that could take years, and I just think between now and then, there will probably be more volatility in the overall market that will present better buying opportunities. But if it was to drop to, like, let's say less than the mid 30s, or maybe even in the 20s, if there's like a market wide correction or crash, this is one of the spec stocks way up on my list that I would love to pick up at those prices. For now though, it's just high up on my watch list. Okay, now changing gears, for stock number 5, I'm actually going to talk about a stock that I'd be very shocked if literally anyone in the entire world called it speculative, and that is Microsoft, ticker symbol MSFT. And before you go off on me in the comment section about how this is not a spec stock, let me just say that of course I completely agree with you. In fact, Microsoft is already my #1 largest stock in my entire portfolio as a very long-term reliable investment with one of the smoothest uptrend looking charts that you'll ever see in the market. However, the recent talks about them acquiring TikTok has not only caught the attention of most of us, but it also leads to a lot of speculation on what that can mean for Microsoft, as TikTok itself is a very new social media app that only recently launched in 2016 in China and then internationally the following year in 2017. So a fairly new player in the very lucrative social media market. But just to give you some context on how successful this app is, their parent company called ByteDance had not even been profitable yet through 2018, despite bringing in over $7 billion in revenue, according to Bloomberg. Well, in large part thanks to TikTok's meteoric rise in recent years, the company actually proceeded to more than double their sales in 2019 at over $17 billion and actually turned a profit of over $3 billion. For context, that's actually more than double the profit that even Twitter brought in that same year. And the result is that if ByteDance was to go public, which by the way, so they're private right now, but if they were to go public, Bloomberg estimated that they could fetch a valuation of as much as $180 billion. In other words, TikTok is a pretty big freaking deal right now. Meanwhile, the app has now surpassed over 2 billion downloads with a record-breaking quarter that saw the most downloads of any app in history, according to Business Insider, thanks in large part to the stay-at-home orders because of the global health issue. There's only one problem though: ByteDance is a Chinese company, and as such, they're being accused of being able to steal user data and give it to the Chinese Communist Party. As a result, US President Trump has issued a ban that will go into effect in 45 days unless the parent company sells the app to a US company. A huge deal, since a lot of TikTok's explosive growth has actually come from young American teens. Well, it just so happens that that's exactly the demographic that Microsoft has always struggled to capture, and as such, they've now thrown their hat into the ring in hopes to acquire the application. In fact, they seem to be so interested in TikTok that they've reportedly even been trying to acquire the app's entire global portfolio outside of China, not just in the US. Obviously, this would be a huge deal for Microsoft, as it would not only finally give them a presence in social media that they've really always lacked, but it also helps them reach that highly coveted young demographic while also diversifying their portfolio of services a little bit too. Of course, the speculation part of all this comes from the fact that no deal has yet been made, and other companies are actually reportedly interested in acquiring TikTok as well, including even Twitter, although I doubt really any of them can compete financially with Microsoft, but also the fact that now Facebook's Instagram has already made a TikTok clone called Reels in a move that would be fairly similar to what they did with Stories as a competitor to Snapchat that really hurt them. And if more clones keep coming out, it could be a very competitive market for TikTok to compete in. Still, Microsoft is an amazing company all on its own, even if they don't acquire TikTok. So adding the possibility of an explosive growing social media app only makes Microsoft stock that much more attractive, and therefore I included it on today's list. So there you have it, guys. What do you think about these stocks that I love to track here, some spec stocks? Let me know what you think down below, and maybe some honorable mentions could have been maybe Nikola Motors, maybe NIO Electric vehicle company out in China, maybe Beyond Meat. That seems like a very interesting one as well. But let me know down in the comments if there's any other spec stocks that I kept off the list that maybe you would add to it, and maybe what would you replace for it. So I'd love to hear your thoughts on that. I'll try to respond to as many comments as I can, but thank you so much for watching. Thank you for all the support. It really means a lot to me. Hope you're all doing well, and I will catch you in the next video. Take care. Bye-bye.